It's down 84% in the last 5 years, though. So the price of 1954 is far lower than its peak. When it IPO'd, it started off at $129 a share. So Rivian is a fallen angel, but it could be a phoenix rising. So if you want to see the Rivian chart, here it is. It's at 1953. Last 5 years, it's been deeply red, negative 84%. But year to date, it's been really green. It's gone up. So it's gone from horrible to bad, which you can make money that way. So if you like Rivian though, if you like their cars and think that the world's going to figure out how good they are, then it might be a good stock to invest in. I bought Rivian not because I know what is going to happen, but because I just kind of believe that it could be something good. And yeah, so let me see let me see. I'm curious to see if I have what my stake in Rivian is. What's the ticker symbol? Let me find the ticker symbol of Rivian. Um, if you guys want to take a look at it. Okay, Rivian stock ticker. The ticker is RIVN, RIVN, and I am curious to see if I own it. RIVN. Okay, I don't own it in this portfolio, but yeah, but I think I did buy some Rivian somewhere. I keep my stocks in different places, but yeah, here we go. I think I found it. Okay, RIVN. Here we go. Okay. Yeah, yeah, but I like Rivian, so I like it, but it's not because I know for sure. It's just because I want to be part of what happens with this company going forward. How do you feel about taking money from retirement that's only gaining 4% and putting it into a real estate deal that's making 12% yearly? I'd be really careful about whose real estate deal you're putting it into. Um, yeah, I'd be really careful. I guess I'd like to just know like what the how are they proving that? Are they guaranteeing that? Like what does 12% yearly, what does that really look like? What kind of deal is it? Am I investing with a bunch of other people? Am I house flipping, buying a home with somebody, and am I going to be a landlord now? Like what does that look like? The easiest way to get involved in real estate is a real estate investment trust, the REIT, because all they do is they pull together everybody's money and they buy houses or apartment buildings or industrial spaces, commercial property with it, and then they make a bunch of money from rental income or whatever, and they have to distribute 90% of that money out to the shareholders. So you will get your cut. You will get your cut. And what they find is that after all the expenses are said and done, that you make as much money by owning a real estate investment trust as you earn by owning a property and buying a property and, you know, fixing toilets and stuff like that. So, I'm not saying it's exactly the same. I own property because I just like owning property. I just like the house. But really, in terms of making money from real estate, I believe real estate investment trusts um, are a great way to get involved without all the stress that comes with owning property, unless you like that kind of thing. All right. So let's see here. Let me answer a couple more questions. Um, I got BM&R call expiring June 15th, 2026. Break even 60, current prices under 30. I'm worried. Um, yeah, it may not hit 60. So if you bought the call option, that's what happens. Sometimes you buy a call and it just doesn't work out. That's the risk. That's the risk of it all. And actually, for those of you that are doing options with us, one thing I want to talk about in class next is actually how you can simulate a stock. You buy a call and you sell a put at the same time with the same strike price. You actually get the same dynamics as owning the stock for a much lower cost, but they call that a synthetic long call. But that's not the same exact same as owning the stock, but it gives you that same effect and experience. But you have to have capital in order to back the options that you're selling